Question 1. Which answer would pass an exam day check for AU.S, traded certificate representing foreign shares in full SIE exam? Option A UIT, Option B T-bill, Option C REIT, Option D ADR. The correct answer is Option D, ADR. An ADR allows U.S. investors to trade a certificate representing shares of a foreign company. A REIT owns real estate assets, a UIT holds a fixed investment portfolio, and a T-bill is short-term U.S. government debt. Question 2. Choose carefully in full SIE exam. A fast-moving market causing execution far from the last quoted price defines which term? Option A bond amortization, Option B market order slippage, Option C dividend adjustment, Option D breakpoint discount. The correct answer is Option B, market order slippage. Market order slippage can occur when prices move quickly before execution. Dividend adjustments, amortization, and breakpoint discounts are unrelated. Question 3. Where does customer shares missing from the records of a failed broker-dealer fit inside full SIE exam review as a account opening angle? Option A market loss claim, Option B dividend preference, Option C missing securities claim, Option D tax loss claim. The correct answer is Option C, missing securities claim. SIPC protection is aimed at missing securities and cash at a failed firm. Market losses, tax losses, and dividend preferences are not the same claim. Question 4. Which answer would pass an exam day check for charging an advisory fee for ongoing portfolio advice in full SIE exam? Option A markup only, Option B bond coupon, Option C advisory fee arrangement, Option D sales concession only. The correct answer is Option C, advisory fee arrangement. Advisory fees compensate investment advice or management services. Markups and concessions are transaction compensation, while bond coupons are issuer interest payments. Question 5. Under SIE conditions, how should a customer relationship summary for retail investors be labeled in full SIE exam as a compliance clue? Option A Form 10K, Option B Form U4, Option C Form U5, Option D Form CRS. The correct answer is Option D, Form CRS. Form CRS gives retail investors a relationship summary. Form U4 and U5 relate to broker registration, while Form 10K is an issuer annual report. Question 6. A short full SIE exam question says an order giving the broker time and price discretion, which option wins? Option A held order, Option B day order, Option C not held order, Option D market order. The correct answer is Option C, not held order. A not held order gives the broker discretion over time and price but not over the security, side, or size. A held order must be handled promptly, a market order prioritizes execution, and a day order only sets duration. Question 7. Which full SIE exam answer is hidden inside the clue? A fee for withdrawing too much too early from an annuity? Option A 12B1 fee, Option B markup, Option C surrender charge, Option D bond discount. The correct answer is Option C, surrender charge. A surrender charge penalizes early annuity withdrawals during a surrender period. Markups are dealer charges, 12B1 fees are fund distribution expenses, and bond discounts refer to price below PAR. Question 8. Which exam-tested phrase in full SIE exam is linked to the account holding variable annuity investment options as a scenario-based review? Option A general account, Option B special memorandum account, Option C separate account, Option D sinking fund. The correct answer is Option C, separate account. The separate account holds variable annuity investment portfolios. The general account backs fixed guarantees, a sinking fund retires debt, and SMA is a margin account concept. Question 9. Imagine a test item says buying a put to protect stock already owned. What is the best full SIE exam answer? Option A short put, Option B covered call, Option C protective put, Option D long call only. The correct answer is Option C, protective put. A protective put uses a long put to limit downside on a stock position. A covered call sells upside, a short put creates a purchase obligation, and a long call is bullish without owning the stock. Question 10. When full SIE exam review mentions a REIT that does not trade on an exchange and may be difficult to sell, which term applies as a real exam wording? Option A SIPC liquidation, Option B Treasury liquidity, Option C non-traded REIT liquidity risk, Option D ETF arbitrage. The correct answer is Option C, non-traded REIT liquidity risk. Non-traded rights can create liquidity concerns because shares may not have an active exchange market. Treasury liquidity, SIPC liquidation, and ETF arbitrage involve other areas. Question 11. If a full SIE exam stem gives only returning customer securities held in street name after a firm liquidation, which answer is safest? Option A, bond call. Option B, issue or buyback. Option C, prospectus refund. Option D, customer asset return. The correct answer is option D, customer asset return. SIPC liquidation aims to return customer securities and cash when a brokerage firm fails. Issuer buybacks, prospectus refunds, and bond calls are separate processes. Question 12. Suppose the exam stem says low trading volume making it harder to sell quickly, which full SIE exam answer is strongest? Option A, tax bracket risk. Option B, low volume liquidity risk. Option C, high coupon risk. Option D, voting risk. The correct answer is option B, low volume liquidity risk. Low volume can make selling harder without price concessions. Coupon, voting, and tax bracket risks are different. Question 13. Choose carefully in full SIE exam, selling borrowed shares and hoping to buy them back lower defines which term? Option A, short sale. Option B, covered call. Option C, rights offering. Option D, long purchase. The correct answer is option A, short sale. A short sale involves borrowing shares, selling them, and hoping to repurchase them at a lower price. A long purchase profits from rising prices, a covered call is an option strategy, and a rights offering is a primary market shareholder right. Question 14. Which full SIE exam clue points to a written statement alleging a sales practice violation? Option A, trade confirmation. Option B, customer complaint. Option C, tombstone ad. Option D, QZIP request. The correct answer is option B, customer complaint. A customer complaint is a written allegation of misconduct or sales practice concern. Trade confirmations report transactions, tombstone ads announce offerings, and QZIP requests identify securities. Question 15. Which full SIE exam clue points to an over-the-counter security with limited market depth? Option A, Roth conversion risk. Option B, FDIC risk. Option C, OTC liquidity risk. Option D, annuity mortality risk. The correct answer is option C, OTC liquidity risk. Some OTC securities can have limited market depth, creating liquidity risk. FDIC, Roth conversion, and annuity mortality risks are unrelated. Question 16. If a full SIE exam stem gives only units used to calculate variable annuity payments after annuitization, which answer is safest? Option A, voting shares. Option B, annuity units. Option C, accumulation units. Option D, bond points. The correct answer is option B, annuity units. Annuity units determine variable annuity payouts during the payout phase. Accumulation units apply before annuitization, bond points quote bond prices, and voting shares relate to equity ownership. Question 17. For full SIE exam practice, which option turns a stop order executing far from the stop price after a price gap into the correct term? Option A, stop order gap risk. Option B, guaranteed limit price. Option C, guaranteed stop price. Option D, guaranteed dividend. The correct answer is option A, stop order gap risk. A stop order becomes a market order, so a price gap can cause execution away from the stop price. It does not guarantee the stop price, a limit price, or dividends. Question 18. For full SIE exam practice, which option turns protection when a broker-dealer fails and customer securities are missing into the correct term? Option A, SIPC protection. Option B, FDIC insurance. Option C, MSRB guarantee. Option D, SEC performance guarantee. The correct answer is option A, SIPC protection. SIPC protection applies when a broker-dealer fails and customer assets are missing. FDIC covers bank deposits, MSRB does not guarantee investments, and the SEC does not guarantee performance. Question 19. During full SIE exam practice, what does the required disclosure explaining standardized options risks describe? Option A, proxy statement. Option B, options disclosure document. Option C, account statement. Option D, official statement. The correct answer is option B, options disclosure document. The options disclosure document explains standardized options and their risks before options trading is approved. Official statements belong to municipal offerings, proxy statements solicit votes, and account statements summarize account activity. Question 20. Choose carefully in full SIE exam. An annuity with value tied to separate account investment performance defines which term. Option A, common stock only. Option B, treasury bond. Option C, variable annuity. Option D, fixed annuity. The correct answer is option C, variable annuity. A variable annuity's value depends on separate account investments and carries market risk. A fixed annuity has insurer-backed credited interest, a treasury bond is debt, and common stock alone is not an insurance contract. Question 21. Identify the tested full SIE exam concept behind a duty to put the client's interests ahead of the advisor's interests. Option A, firm commitment. Option B, suitability only. Option C, fiduciary duty. Option D, market making. The correct answer is option C, fiduciary duty. Investment advisors are associated with a fiduciary duty to clients. Suitability only is a lower broker-dealer standard, market making quotes securities, and firm commitment is underwriting. Question 22. Before recording a lesson on full SIE exam, which term explains protection that does not guarantee investment value? Option A, no performance guarantee. Option B, guaranteed profit. Option C, guaranteed tax result. Option D, guaranteed yield. The correct answer is option A, no performance guarantee. SIPC does not guarantee profits, yields, or investment value. It is a customer asset protection system for failed broker-dealers. Question 23. Which choice best matches a customer losing money because securities declined in value on a full SIE exam question? Option A, FDIC stock insurance. Option B, full SIPC reimbursement. Option C, MSRB loss payment. Option D, no SIPC market loss coverage. The correct answer is option D, no SIPC market loss coverage. SIPC does not protect customers from ordinary market losses. FDIC stock insurance and MSRB loss payments do not cover declining securities prices either. Question 24. A candidate sees one fee covering advisory services and transaction costs during full SIE exam review. What should they choose? Option A, SIPC advance. Option B, breakpoint schedule. Option C, bond ladder. Option D, wrap fee program. The correct answer is option D, wrap fee program. A wrap fee program charges one fee for advisory and related services. Breakpoints, bond ladders, and SIPC advances are unrelated. Question 25. Review the scenario: securities trading away from a listed exchange. Which full SIE exam choice matches? Option A, auction market. Option B, primary market. Option C, over-the-counter market. Option D, dividend market. The correct answer is option C, over-the-counter market. The over-the-counter market covers securities traded outside a centralized exchange listing. The primary market issues new securities, an auction market matches exchange orders, and dividend market is not a standard SIE market category. Question 26. Can you spot the full SIE exam answer when the clue is coverage tied to accounts at member broker-dealers? Option A, bank savings account. Option B, insurance policy claim. Option C, SIPC member firm account. Option D, commodity pool only. The correct answer is option C, SIPC member firm account. SIPC protection applies through member broker-dealers. Bank accounts, insurance claims, and commodity pools are not the core SIPC customer account coverage. Question 27. Which exam-tested phrase in full SIE exam is linked to a liquidation process using a trustee to return customer property? Option A, underwriting syndicate. Option B, proxy committee. Option C, transfer syndicate. Option D, SIPC trustee process. The correct answer is option D, SIPC trustee process. A SIPC liquidation may involve a trustee working to return customer property. Syndicates and proxy committees have different roles. Question 28. Look closely at a client disclosure document explaining advisory services, fees, and conflicts. Which full SIE exam answer should be selected? Option A, advisor brochure. Option B, official statement. Option C, margin call. Option D, option agreement. The correct answer is option A, advisor brochure. An advisor brochure discloses advisory services, fees, and conflicts to clients. Official statements, option agreements, and margin calls are unrelated. Question 29. Pick the SIE term connected to a separate cash limit within SIPC customer protection and full SIE exam. Option A, SIPC cash sublimit. Option B, Treasury PR guarantee. Option C, unlimited cash insurance. Option D, municipal tax guarantee. The correct answer is option A, SIPC cash sublimit. SIPC coverage has a customer protection limit with a smaller cash sublimit. It is not unlimited cash insurance, a Treasury PAR guarantee, or a municipal tax guarantee. Question 30. Under SIE conditions, how should an insurance contract whose value changes with separate account investments be labeled in full SIE exam? Option A, fixed annuity. Option B, treasury bond. Option C, money market fund. Option D, variable annuity. The correct answer is option D, variable annuity. A variable annuity's value depends on the performance of separate account investments. A fixed annuity provides insurer guarantees, a money market fund is an investment company product, and a treasury bond is government debt. Question 31. A candidate sees limited protection for missing securities and cash at a failed brokerage firm during full SIE exam review. What should they choose? Option A, SIPC coverage limit. Option B, unlimited market protection. Option C, issuer guarantee. Option D, FDIC bank limit. The correct answer is option A, SIPC coverage limit. SIPC provides limited protection for missing customer assets when a brokerage firm fails. It does not provide unlimited market protection, FDIC bank coverage, or issuer guarantees. Question 32. Which full SIE exam clue points to receiving premium and taking on an exercise obligation? Option A, option writer. Option B, option buyer. Option C, rights holder. Option D, bond holder. The correct answer is option A, option writer. An option writer receives premium and must perform if assigned. An option buyer has a right, a bond holder owns debt, and a rights holder may buy new stock but does not have an options assignment obligation. Question 33. A SIE full SIE exam item describes a brokerage firm liquidation rather than an issuer bankruptcy. Which answer fits? Option A, issuer default. Option B, municipal default. Option C, broker-dealer failure. Option D, corporate earnings miss. The correct answer is option C, broker-dealer failure. SIPC is tied to broker-dealer failure and missing customer assets. Issuer default, municipal default, and earnings misses are investment risks. Question 34. Which choice best matches an electronic dealer market with competing market makers on a full SIE exam question? Option A, Treasury Direct. Option B, NASDAQ. Option C, municipal issuer. Option D, NYSE floor auction. The correct answer is option B, NASDAQ. NASDAQ is an electronic dealer market where market makers quote prices. The NYSE floor auction uses a different structure. Treasury Direct sells government securities, and a municipal issuer raises public funds. Question 35. What should stand out in a full SIE exam STEM about documenting how much investment loss a customer can accept? Option A, CUSIP number. Option B, coupon rate. Option C, risk tolerance. Option D, syndicate spread. The correct answer is option C, risk tolerance. Risk tolerance is a key customer profile fact for recommendations. Coupon rates, CUSIP numbers, and syndicate spreads are product or offering details. Question 36. For full SIE exam practice, which option turns commodity futures contracts outside normal SIPC securities protection into the correct term as a last-minute review? Option A, no SIPC futures coverage. Option B, SIPC bond coverage. Option C, SIPC stock coverage. Option D, SIPC cash coverage. The correct answer is option A, no SIPC futures coverage. SIPC focuses on securities and cash and brokerage accounts, not ordinary commodity futures contracts. Stocks, cash, and bonds may be within the normal customer asset framework. Question 37. Review the scenario: a derivative product needing special risk awareness. Which full SIE exam choice matches? Option A, options guarantee dividends. Option B, options are not suitable for every investor. Option C, options remove all market risk. Option D, options are insured by SIPC against losses. The correct answer is option B, options are not suitable for every investor. Options can involve leverage, expiration, and assignment risk, so they are not suitable for every investor. They do not remove all market risk, SIPC does not insure against trading losses, and options do not guarantee dividends. Question 38. Does short-term rates higher than long-term rates point to which SIE tested answer in full SIE exam as a regulatory angle? Option A, normal yield curve. Option B, cumulative dividend. Option C, flat tax rate. Option D, inverted yield curve. The correct answer is option D, inverted yield curve. An inverted yield curve occurs when short-term yields are above long-term yields. A normal curve generally slopes upward, flat tax rate is not a yield curve term, and cumulative dividend belongs to preferred stock. Question 39. Does price control that may prevent the order from being filled point to which SIE tested answer in full SIE exam? Option A, guaranteed fill. Option B, automatic dividend. Option C, firm commitment. Option D, limit order execution risk. The correct answer is option D, limit order execution risk. Limit orders protect price but may not execute if the market does not reach the limit. Guaranteed fills, dividends, and firm commitment underwriting do not describe this order risk. Question 40. Choose carefully in full SIE exam. The investment account supporting a variable annuity defines which term? Option A, separate account. Option B, transfer agent account. Option C, general account. Option D, margin account. The correct answer is option A, separate account. A variable annuity uses a separate account for investment options, so the owner bears investment risk. The general account supports fixed guarantees, a margin account involves borrowing, and a transfer agent account is not the annuity investment account. Question 41. Which full SIE exam clue points to a dispute resolution process often used for customer-broker disputes as a account opening angle? Option A, hypothecation. Option B, underwriting. Option C, annuitization. Option D, arbitration. The correct answer is option D, arbitration. Arbitration is a formal dispute resolution process used in the securities industry. Underwriting distributes new issues, annuitization converts annuity value to payments, and hypothecation pledges margin securities. Question 42. Identify the tested full SIE exam concept behind work outside the firm that must be disclosed under firm rules. Option A, currency risk. Option B, ex-dividend date. Option C, outside business activity. Option D, cash settlement. The correct answer is option C, outside business activity. Outside business activity must be disclosed so the firm can supervise potential conflicts. Cash settlement is same-day settlement, currency risk comes from exchange rates, and ex-dividend date affects dividend entitlement. Question 43. Which full SIE exam concept separates a broker-dealer recommendation standard focused on the retail customer's best interest from the other choices? Option A, regulation best interest. Option B, MSRB markup rule. Option C, Investment Company Act only. Option D, SIPC rule. The correct answer is option A, regulation best interest. Regulation best interest applies to broker-dealer recommendations to retail customers. Investment Company, SIPC, and MSRB markup rules do not define this standard. Question 44. Which full SIE exam concept separates bank deposit insurance not covering stocks or bonds from the other choices? Option A, FDIC does not insure securities. Option B, FINRA insures bank accounts. Option C, MSRB pays failed broker claims. Option D, SIPC guarantees market gains. The correct answer is option A, FDIC does not insure securities. FDIC insurance applies to eligible bank deposits, not securities such as stocks, bonds, or mutual funds. SIPC does not guarantee market gains, FINRA is not a bank insurer, and the MSRB does not pay customer claims after broker failure. Question 45. Imagine a test item says the customer gets execution but not a guaranteed price. What is the best full SIE exam answer? Option A, market order price risk. Option B, limit price protection. Option C, all or none restriction. Option D, stop price activation. The correct answer is option A, market order price risk. Market orders generally provide execution speed but not price certainty. Limit price protection, stop activation, and all or none restrictions describe different order features. Question 46. If a full SIE exam STEM gives only a fund investing in short-term high-quality instruments, which answer is safest as a core syllabus point? Option A, variable annuity. Option B, money market fund. Option C, closed-end bond fund. Option D, growth fund. The correct answer is option B, money market fund. A money market fund invests in short-term, high-quality debt instruments and seeks stability. A growth fund targets appreciation, a closed-end bond fund trades on an exchange, and a variable annuity is an insurance contract. Question 47. Does price protection at the cost of possible non-execution point to which SIE tested answer in full SIE exam? Option A, market order certainty. Option B, limit order trade-off. Option C, stop order trigger. Option D, proxy authority. The correct answer is option B, limit order trade-off. The limit order trade-off is price control versus possible non-execution. Market orders seek certainty, stop orders use triggers, and proxy authority concerns voting. Question 48. Where does information a reasonable investor would consider important fit inside full SIE exam review? Option A, PR quotation. Option B, public rumor. Option C, material information. Option D, nominal value. The correct answer is option C, material information. Material information is information a reasonable investor would likely consider important in making an investment decision. A public rumor may be unreliable, nominal value is not the test, and PR quotation relates to bond pricing. Question 49. When full SIE exam review mentions a representative doing securities business outside the firm without approval, which term applies? Option A, hypothecation. Option B, selling away. Option C, front-running. Option D, pegging. The correct answer is option B, selling away. Selling away occurs when a representative participates in outside securities transactions without proper firm notice or approval. Front-running trades ahead of orders, pegging manipulates prices, and hypothecation pledges margin securities. Question 50. During full SIE exam practice, what does a demand to deposit cash or securities when equity is too low describe? Option A, proxy request. Option B, trade confirmation. Option C, margin call. Option D, dividend notice. The correct answer is option C, margin call. A margin call requires a customer to add equity when margin requirements are not met. Dividend notices involve distributions, trade confirmations report executions, and proxy requests relate to voting. Question 51. Does using reasonable diligence and care when making a recommendation point to which SIE tested answer in full SIE exam? Option A, dividend election. Option B, care obligation. Option C, registration termination. Option D, custody only. The correct answer is option B, care obligation. The care obligation requires reasonable diligence and care in recommendations. Custody, termination, and dividend elections do not describe this reg by requirement. Question 52. Imagine a test item says an exchange using an auction market and designated market makers. What is the best full SIE exam answer? Option A, OTC Pink. Option B, NASDAQ. Option C, NYSE. Option D, money market. The correct answer is option C, NYSE. The NYSE is an auction-style exchange with designated market makers supporting orderly trading. NASDAQ is a dealer/electronic market, OTC Pink is an over-the-counter quotation venue, and the money market involves short-term debt. Question 53. A quick-fire full SIE exam video asks about securities business done away from the firm that requires prior notice or approval. Which answer fits? Option A, good delivery. Option B, private securities transaction. Option C, public appearance. Option D, cash account. The correct answer is option B, private securities transaction. A private securities transaction involves securities activity outside the regular firm channel and requires firm notice or approval. Public appearance is a communication category, cash account is an account type, and good delivery concerns settlement requirements. Question 54. Review the scenario: a position where losses can grow as the stock rises. Which full SIE exam choice matches? Option A, long put. Option B, long stock position. Option C, short stock position. Option D, treasury bill. The correct answer is option C, short stock position. A short stock position has theoretically unlimited loss potential because a stock price can keep rising. A long put has loss limited to premium, a long stock position can lose only down to zero, and a treasury bill is short-term debt. Question 55. Which choice best matches the self-regulatory organization for broker-dealers on a full SIE exam question? Option A, MSRB. Option B, FINRA. Option C, SIPC. Option D, SEC. The correct answer is option B, FINRA. FINRA is the self-regulatory organization that oversees broker-dealers and registered representatives. The SEC is the federal securities regulator, the MSRB focuses on municipal securities rules, and SIPC protects customers if a broker-dealer fails. Question 56. Which full SIE exam concept separates limits on business-related gifts to prevent conflicts of interest from the other choices? Option A, margin interest. Option B, gifts and gratuities limit. Option C, breakpoint discount. Option D, dividend exclusion. The correct answer is option B, gifts and gratuities limit. Gift and gratuity limits help reduce conflicts and improper influence. Breakpoint discounts reduce mutual fund sales charges, dividend exclusion is a tax concept, and margin interest is charged on borrowed funds. Question 57. Pick the SIE term connected to cash coverage being part of the overall SIPC protection amount in full SIE exam. Option A, bond coupon limit. Option B, ETF expense limit. Option C, cash sublimit. Option D, unlimited cash coverage. The correct answer is option C, cash sublimit. SIPC cash protection is subject to a sublimit within the overall protection amount. The other choices are not SIPC coverage rules. Question 58. If a full SIE exam STEM gives only difficulty quickly selling an interest in a partnership program, which answer is safest? Option A, liquidity risk. Option B, reinvestment risk. Option C, currency risk. Option D, call risk. The correct answer is option A, liquidity risk. DPP interests are often illiquid, so selling quickly may be difficult. Call risk involves early bond redemption, reinvestment risk involves replacing income, and currency risk involves exchange rates. Question 59. Choose carefully in full SIE exam. A firm in the business of securities transactions for customers or itself defines which term. Option A, issuer only. Option B, investment advisor only. Option C, broker-dealer. Option D, custodian only. The correct answer is option C, broker-dealer. A broker-dealer conducts securities transactions as agent, principal, or both. An investment advisor is paid for advice, an issuer sells its own securities, and a custodian holds assets. Question 60. Which answer would pass an exam day check for mixing customer securities with firm securities improperly in full SIE exam? Option A, breakpoint. Option B, commingling. Option C, annuitization. Option D, diversification. The correct answer is option B, commingling. Commingling customer and firm assets improperly violates customer protection principles. Diversification spreads risk, breakpoints reduce sales charges, and annuitization creates income payments. Question 61. Which full SIE exam clue points to a dealer selling from inventory above the prevailing market price? Option A, markup. Option B, expense ratio. Option C, dividend. Option D, commission. The correct answer is option A, markup. A markup is added when a dealer sells a security to a customer from inventory. A commission compensates agency trades, a dividend is an issuer payment to shareholders, and an expense ratio is a fund cost. Question 62. What should stand out in a full SIE exam STEM about a bullish options position with limited loss to premium? Option A, short stock. Option B, long call. Option C, covered put. Option D, long put. The correct answer is option B, long call. A long call benefits when the underlying rises and the buyer's loss is limited to the premium paid. A long put is bearish, short stock gains when prices fall, and covered put is not the basic bullish call position. Question 63. Imagine a test item says being paid to give securities advice as a business. What is the best full SIE exam answer? Option A, broker-dealer only. Option B, investment advisor. Option C, issuer. Option D, transfer agent. The correct answer is option B, investment advisor. An investment advisor is generally paid for securities advice as a business. Broker-dealers execute securities business, transfer agents track ownership, and issuers create securities. Question 64. Why would a graph comparing yields across maturities for similar bonds lead to one specific full SIE exam answer? Option A, order book. Option B, fund prospectus. Option C, yield curve. Option D, proxy ballot. The correct answer is option C, yield curve. A yield curve shows yields by maturity for similar debt securities. An order book shows trading interest, a prospectus describes an offering, and a proxy ballot records shareholder votes. Question 65. If a full SIE exam STEM gives only selling a call while owning the underlying stock, which answer is safest? Option A, naked call. Option B, covered call. Option C, protective put. Option D, long put. The correct answer is option B, covered call. A covered call involves writing a call while owning the underlying shares. A naked call lacks the stock position, a long put is a bearish right to sell, and a protective put ensures own stock. Question 66. Which full SIE exam clue points to a communication implying returns that are not properly supported? Option A, balanced presentation. Option B, trade confirmation. Option C, official statement. Option D, misleading projection. The correct answer is option D, misleading projection. Misleading projections can violate communication standards because investors may be misled about likely returns. Balanced presentation includes risks, official statements disclose municipal offerings, and trade confirmations report executed trades. Question 67. Can you spot the full SIE exam answer when the clue is a need to check risk tolerance, liquidity needs, and tax situation before recommending a DPP? Option A, automatic approval. Option B, tender offer filing. Option C, FDIC verification. Option D, DPP suitability review. The correct answer is option D, DPP suitability review. DPPs require careful suitability review because they may be illiquid, complex, and tax-driven. They are not automatically approved for every customer. FDIC verification concerns bank deposits, and tender offer filings are separate. Question 68. Review the scenario ongoing compensated advice rather than mainly trade execution. Which full SIE exam choice matches as a trading application? Option A, transfer agent role. Option B, broker-dealer execution role. Option C, investment advisor role. Option D, issuer role. The correct answer is option C, investment advisor role. Investment advisors are associated with compensated advice. Broker-dealers mainly affect securities transactions, transfer agents keep ownership records, and issuers create securities. Question 69. Review the scenario in order requiring prompt handling without time price discretion. Which full SIE exam choice matches? Option A, GTC order. Option B, held order. Option C, discretionary order. Option D, not held order. The correct answer is option B, held order. A held order must be handled promptly under the customer's instructions. A not held order gives time and price discretion, GTC describes duration, and a discretionary order allows broader trading decisions only with authorization. Question 70. Suppose the exam stem says law creating customer protection through SIPC when broker-dealers fail. Which full SIE exam answer is strongest? Option A, Regulation T. Option B, Blue Sky Law. Option C, Securities Act of 1933. Option D, Securities Investor Protection Act. The correct answer is option D, Securities Investor Protection Act. The Securities Investor Protection Act created SIPC protection for customers of failed broker-dealers. The 1933 Act covers new issue disclosure, Regulation T covers credit, and Blue Sky laws are state securities laws. Question 71. A short full SIE exam question says a firm selling securities from its own inventory with a markup. Which option wins? Option A, investment advisor acting as fiduciary. Option B, clearing agency acting as custodian. Option C, broker acting as agent. Option D, dealer acting as principal. The correct answer is option D, dealer acting as principal. A dealer acts as principal when it trades from its own account and earns a markup or markdown. A broker earns a commission as agent, an advisor is paid for advice, and a clearing agency supports settlement rather than selling inventory. Question 72. During full SIE exam practice, what does the usual 50% initial equity requirement for buying stock on margin describe? Option A, SIPC rule. Option B, Regulation T. Option C, Rule 144. Option D, MSRB Rule G37. The correct answer is option B, Regulation T. Regulation T sets the initial margin requirement for many securities purchases, commonly tested at 50% for stocks. SIPC rules protect customers after firm failure. MSRB Rule G37 covers municipal political contributions, and Rule 144 governs restricted and control stock resales. Question 73. Why would holding or having access to client funds or securities lead to one specific full SIE exam answer? Option A, proxy custody only. Option B, syndicate custody. Option C, coupon custody only. Option D, custody of client assets. The correct answer is option D, custody of client assets. Custody means holding or having access to client assets and creates regulatory obligations. The other choices do not describe advisory custody. Question 74. For full SIE exam practice, which option turns few buyers and sellers available for a security into the correct term? Option A, liquidity risk. Option B, credit risk. Option C, currency risk. Option D, inflation risk. The correct answer is option A, liquidity risk. Liquidity risk is the risk that a security cannot be sold quickly at a fair price. Inflation, credit, and currency risk describe different concerns. Question 75. Which answer would pass an exam day check for a stop limit order activating but not filling because the limit price is missed in full SIE exam? Option A, guaranteed voting right. Option B, stop limit non-execution risk. Option C, guaranteed coupon. Option D, guaranteed market fill. The correct answer is option B, stop limit non-execution risk. Stop limit orders protect price but can miss execution after activation. They do not guarantee a market fill, coupon, or voting right. Question 76. How should a candidate classify the central bank influencing money supply and interest rates in full SIE exam? Option A, SIPC. Option B, Federal Reserve Board. Option C, MSRB. Option D, transfer agent. The correct answer is option B, Federal Reserve Board. The Federal Reserve Board influences monetary policy, money supply, and interest rates. SIPC protects brokerage customers after firm failure, the MSRB writes municipal rules, and a transfer agent tracks securities ownership. Question 77. Suppose the exam stem says placing a retail customer's interest ahead of the representative's interest. Which full SIE exam answer is strongest? Option A, MSRB Rule G17. Option B, Regulation T. Option C, Regulation Best Interest. Option D, Rule 144. The correct answer is option C, Regulation Best Interest. Regulation Best Interest requires broker-dealers and associated persons to act in a retail customer's best interest when making recommendations. Regulation T covers credit, Rule 144 covers restricted and control stock, and MSRB Rule G17 is a municipal fair dealing rule. Question 78. What should stand out in a full SIE exam stem about a large market order moving through several price levels? Option A, proxy contest. Option B, tax equivalent yield. Option C, market impact risk. Option D, accrued interest. The correct answer is option C, market impact risk. A large market order may move the price as it executes through available quotes. Accrued interest, tax equivalent yield, and proxy contests are unrelated. Question 79. For full SIE exam practice, which option turns the day an order is executed into the correct term? Option A, settlement date. Option B, payable date. Option C, record date. Option D, trade date. The correct answer is option D, trade date. Trade date is the date the transaction is executed. Settlement date is when cash and securities transfer. Record date determines dividend ownership records, and payable date is when the dividend is paid. Question 80. After reading identifying and addressing conflicts in a retail recommendation, which full SIE exam concept should not be confused with distractors as a trading application? Option A, ETF redemption. Option B, CTR filing. Option C, conflict obligation. Option D, bond accretion. The correct answer is option C, conflict obligation. Reg BI includes obligations around conflicts of interest. CTR filings, bond accretion, and ETF redemption are separate topics. Question 81. Can you spot the full SIE exam answer when the clue is up to $500,000 of brokerage protection including $250,000 cash? Option A, SIPC coverage limit. Option B, Reg T margin limit. Option C, FDIC standard deposit limit. Option D, MSRB markup limit. The correct answer is option A, SIPC coverage limit. SIPC coverage is commonly tested as up to $500,000 per separate customer, including a $250,000 limit for cash. FDIC limits apply to bank deposits. Regulation T covers margin credit, and MSRB markup limit is not the tested protection figure. Question 82. Imagine a test item says thin trading outside regular hours increasing execution uncertainty. What is the best full SIE exam answer? Option A, FDIC risk. Option B, wash sale risk. Option C, after hours market order risk. Option D, bond call risk. The correct answer is option C, after hours market order risk. Market orders outside regular hours can face wider spreads and less liquidity. FDIC, bond call, and wash sale risks are different. Question 83. Look closely at a wide bid-ask spread increasing the cost of selling. Which full SIE exam answer should be selected? Option A, liquidity risk. Option B, reinvestment risk. Option C, tax risk. Option D, call risk. The correct answer is option A, liquidity risk. Wide bid-ask spreads can signal poor liquidity and higher trading cost. Call, reinvestment, and tax risk do not describe this trading problem. Question 84. Does the federal agency enforcing securities laws point to which SIE tested answer in full SIE exam? Option A, SEC. Option B, MSRB. Option C, FDIC. Option D, FINRA. The correct answer is option A, SEC. The SEC enforces federal securities laws and oversees the securities markets. FINRA regulates broker-dealers, the MSRB writes municipal securities rules, and the FDIC ensures bank deposits rather than securities. Question 85. Why would the minimum equity a long margin account must keep lead to one specific full SIE exam answer? Option A, maintenance margin. Option B, sales charge. Option C, initial margin. Option D, loan consent. The correct answer is option A, maintenance margin. Maintenance margin is the minimum equity that must remain in a margin account after purchase. Initial margin applies at the time of purchase, sales charge is a fund cost, and loan consent allows securities lending but is not the equity minimum. Question 86. Which full SIE exam answer is hidden inside the clue protection if a broker-dealer fails and customer assets are missing? Option A, bond rating guarantee. Option B, FDIC insurance. Option C, market loss insurance. Option D, SIPC protection. The correct answer is option D, SIPC protection. SIPC protects customers if a broker-dealer fails and securities or cash are missing, subject to limits. FDIC insurance covers bank deposits, market loss insurance is not provided, and bond ratings do not guarantee repayment. Question 87. During full SIE exam practice, what does insurance with cash value tied to separate account performance describe as a product feature? Option A, closed-end fund. Option B, fixed annuity. Option C, treasury bond. Option D, variable life insurance. The correct answer is option D, variable life insurance. Variable life insurance involves investment risk because cash value depends on separate account performance. Fixed annuities provide insurer guarantees, treasury bonds are government debt, and closed-end funds are investment companies. Question 88. Choose carefully in full SIE exam. Trading on material non-public information defines which term? Option A, insider trading. Option B, breakpoint sale. Option C, churning. Option D, selling away. The correct answer is option A, insider trading. Insider trading involves trading while using material non-public information. Selling away is unauthorized outside securities business, churning is excessive trading for commissions, and breakpoint sale avoids mutual fund discounts. Question 89. During full SIE exam practice, what does a firm arranging a trade for a customer and charging a commission describe? Option A, transfer agent acting as record keeper. Option B, dealer acting as principal. Option C, broker acting as agent. Option D, issuer acting as seller. The correct answer is option C, broker acting as agent. A broker acting as agent executes on behalf of a customer and is compensated by commission. A dealer acts as principal from inventory, an issuer sells its own securities, and a transfer agent maintains ownership records. Question 90. Pick the SIE term connected to the exchange participant helping maintain a fair and orderly market in full SIE exam. Option A, transfer agent. Option B, custodian. Option C, designated market maker. Option D, options holder. The correct answer is option C, designated market maker. A designated market maker helps maintain fair and orderly trading in assigned exchange-listed securities. A transfer agent keeps records, an options holder owns a contract right, and a custodian holds assets. Question 91. Which choice best matches losses from a passive program generally limited against passive income on a full SIE exam question? Option A, passive loss limitation. Option B, wash sale rule. Option C, SIPC advance. Option D, dividend exclusion. The correct answer is option A, passive loss limitation. Passive loss limits affect how DPP losses may be used for tax purposes. Wash sale rules apply to securities losses, dividend exclusion is not the DPP rule, and SIPC advances relate to failed brokerage firms. Question 92. Choose carefully in full SIE exam. A transaction that creates a new short options position defines which term? Option A, opening purchase. Option B, exercise. Option C, closing purchase. Option D, opening sale. The correct answer is option D, opening sale. An opening sale writes an option and creates a short position. An opening purchase creates a long position, a closing purchase exits a short position, and exercise uses the option right. Question 93. Choose carefully in full SIE exam. The risk of missing a better return elsewhere defines which term. Option A, credit risk. Option B, regulatory risk. Option C, currency risk. Option D, opportunity cost. The correct answer is option D, opportunity cost. Opportunity cost is the benefit given up by choosing one investment over another. Credit risk is default risk, currency risk comes from exchange rates, and regulatory risk comes from rule changes. Question 94. Can you spot the full SIE exam answer when the clue is compensation tied to investment gains under advisory rules? Option A, markup. Option B, sales load. Option C, performance-based fee. Option D, bond coupon. The correct answer is option C, performance-based fee. Performance-based fees are advisory compensation tied to results and are subject to rules. Coupons, loads, and markups are different compensation or income items. Question 95. A candidate sees the anti-fraud rule often linked to deceptive securities practices during full SIE exam review. What should they choose? Option A, Rule 10b-5. Option B, Regulation T. Option C, Rule 144. Option D, SIPC Rule 500. The correct answer is option A, Rule 10b-5. Rule 10b-5 is a major anti-fraud rule used against deceptive practices, including insider trading. Rule 144 covers resales, Regulation T covers credit, and SIPC Rule 500 is not the standard SIE anti-fraud answer. Question 96. When full SIE exam review mentions a customer losing money because a recommendation performed poorly, which term applies? Option A, full SIPC protection. Option B, MSRB reimbursement. Option C, FDIC reimbursement. Option D, no coverage for bad investment advice. The correct answer is option D, no coverage for bad investment advice. SIPC does not cover losses from bad advice or poor investment performance. FDIC and MSRB reimbursement do not cover that securities loss either. Question 97. Which full SIE exam answer is hidden inside the clue investors trading outstanding shares with each other as a high-yield review? Option A, private placement. Option B, treasury auction. Option C, secondary market. Option D, primary market. The correct answer is option C, secondary market. The secondary market is where existing securities trade between investors after issuance. The primary market sells new securities, a private placement sells directly to selected investors, and a treasury auction is a government issuance process. Question 98. Pick the SIE term connected to a bearish or protective options position in full SIE exam. Option A, long call. Option B, long put. Option C, bull spread only. Option D, covered call. The correct answer is option B, long put. A long put benefits when the underlying falls and can also protect a stock position. A long call is bullish, a covered call involves selling calls against owned stock, and a bull spread is a different multi-leg strategy. Question 99. Choose carefully in full SIE exam. Wrongfully taking or using customer funds or securities defines which term. Option A, reinvestment. Option B, redemption. Option C, hypothecation. Option D, conversion. The correct answer is option D, conversion. Conversion is the wrongful use or taking of customer property. Hypothecation pledges securities in a margin account, reinvestment uses income to buy more securities, and redemption is selling fund shares back to the issuer. Question 100. Which exam-tested phrase in full SIE exam is linked to a dealer buying into inventory below the prevailing market price? Option A, management fee. Option B, markdown. Option C, sales load. Option D, accrued interest. The correct answer is option B, markdown. A markdown applies when a dealer buys a security from a customer into inventory below the prevailing market price. A sales load is a mutual fund charge, accrued interest belongs to bond pricing, and a management fee pays a fund advisor.